Let's take a quick look at the Guru Focus page for Nike. So right away, I like to take a quick look at the warning signs or the good signs that the page tells me. So I can see right here that there are 4 medium warning signs, so nothing severe, and then 2 good signs. So let's click on this and find out what it's telling us. So I want to quickly look at the warning signs first. So the first one there, the dividend yield is close to a 1-year low. Okay, and that's not a terrible thing. It just right away, I think it's because the price has gone up, and that makes sense. So we can look into that a little bit more just to see exactly what it is. And so right away, I see that it's actually quite consistent. So 1.32 is the last one that it has on the site, and so it's pretty consistent between 1 and 1.5. So that sort of range, not bad to me. And dividend is not something that I put a whole lot of weight on, but other people might want to look at it for the dividend and its consistency. So I'm not too alarmed by that one. The second one tells us that the price is close to a 10-year high. Okay, so changing, obviously, valuation. Nike is a very attractive company in the market right now, very strong brand, but let's just see what it tells us. Okay, so it appears to be blank, but you can actually see the price right up the top here. So Guru Focus gives us the price of the stock here. So you can just go back 1 year, and so from a low of just around $50 a share to almost $70 a share more recently here in February 2018. So when you're buying at, and this is a 10-year high, so at a 10-year high, you really hope that it's growing and it can be justified and the price isn't just going up, because there's a lot of enthusiasm for that business. So something to take note of. And that's why it's only a medium warning. So it's not alarming, but it's something to just be cognizant of. So the third one here, the price to sales ratio, the PS ratio, close to a 2-year high. So again, to me, this would probably be related to the price of the stock going up. So this is obviously related to revenues and sales. So sales not exactly catching up with the price, but that could have a lot to do with, just like I mentioned, enthusiasm for this company. So 10 years ago, the price to sales ratio was below 2. And so today you can see it's above 2.5, close to 3 over the past couple of years. So it's something to look into a little bit more. Price to sales ratio is one that I do like to look at quite a bit, in conjunction with the price to earnings ratio. But so something to take note of. And then the fourth one here, long-term debt, issuing new debt. So, it says Nike has been issuing new debt over the past 3 years. It issued $3.5 billion of debt. So overall, it says the debt level is acceptable. Let's just find out if it tells us a little bit more about that. And so, you can see a little bit of a spike here. So there's more to this. Long-term debt, it tells us the definition is debt due more than 12 months in the future. And so it gives you a little bit of a description, but I want to look into this one a little bit more. So let's click on that button, and you can see that the long-term debt and capital lease obligation has gone up quite a bit over the past few years. And so we'll have to look into the filings to get more information about why. But so that could be one out of those 4 warning signs that I really want to look into more than the others, and to see what's going on with Nike. So let's quickly go back, because I want to see what those good signs are. And Guru Focus has a really good system here with giving you good signs and warning signs. So when you're quickly scanning a business just to see what more research you want to do, you can see a few of the quick, good, and warning signs. So right away, it tells us revenue per share, consistent growth. And that's a very good thing. You can also see the star rating here at the top. The Guru Focus has these stars for a company that is very consistent over the past 10 years in its ability to either grow or to grow its sales and earnings. So let's just look at the details here to see exactly what this growth looks like. And so here you can see this rough graph is fairly steady in its revenue per share, and today being over $20 per share there, which is very nice. So the second good sign is that we have an expanding operating margin. So that's very good. And so when I look at the numbers really quick, I don't know if it's expanding or if it's just sort of staying steady, which is to me still very good. But the algorithm has identified it as expanding. So let's just click on the button just to see exactly what it looks like over the past 10 years or more. And so I don't know if this is expanding. I think it's relatively flat going back to the 90s. So obviously there have been a lot of changes, but I think at least over the past 10 to 20 years, it definitely has been going up. Since 2008, it was quite a bit lower. And the past few years, it's been steady above 13. So that's a good sign. I think that's a very good thing. You can look into more depth of the calculations and what goes into calculating the operating margin. So obviously operating income divided by revenue. And when you click on any of these buttons, it'll give you the data, the raw data, and the formulas. So this is a lot of great information. Nike, obviously a very strong brand. You're going to have good profit margins, an economic moat, as you might say. Very viable, very strong long-term business where competitors are going to have a hard time cutting into its margins. So it doesn't necessarily need to compete on price. And you can see that's very evident here. So that is Nike in a nutshell. If you want to look into it a little bit yourself, feel free to click on the link in the description below. Go to this page and you can look into any of these numbers on your own. All right, thanks guys. Bye for now.